Netflix shares losing a quarter of their value in the pre-market after subscribers began the year by leaving the service. Julia Borson joins us now with more. Julia, good morning.
Well, Melissa, the company lost 200,000 subscribers instead of adding the 2.7 million that analysts had projected. And Netflix would have fallen short of expectations even if it had not lost the 700,000 subscribers that it did in Russia when it shut down its service there. Now, the company says things are going to get worse. Netflix guided to the loss of 2 million subs in the second quarter instead of the addition of 2.6 million, which is what analysts had anticipated it would guide to. Now, to help reverse those numbers, co-CEO Reed Hastings saying that he's open to advertising, doing a 180 on his prior anti-ad stance. Hastings now saying that ads are a key way to give consumers a lower cost choice.
Allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense. So that's something we're looking at now. We're trying to figure out over the next year or two. But think of us as quite open to offering even lower prices with advertising as a consumer choice.
As for the company's slower growth, Netflix citing a number of factors, including market penetration, competition, sluggish economic growth, inflation, and password sharing, saying that in addition to Netflix's 222 million paying households, they estimate that Netflix is being shared with over 100 million additional households, including 30 million in the U.S. and Canada. Hastings saying they're working to generate revenue from those viewers to help reaccelerate revenue growth.
Working on how to monetize sharing. We've been thinking about that for a couple of years, but when we were growing fast, it wasn't the high priority to work on. And now we're working super hard on it. And, remember, these are over 100 million households that already are choosing to view Netflix. They love the service. We just got to get paid, at some degree for them.
Netflix's shortfall dragging down other streaming stocks as well in after-hours trading. See Roku shares down nearly 7%, Disney off 5%, Paramount off nearly 6%, and Warner Brothers off almost 5% as well, pre-market. Guys?
Julia, I wonder if it's time now to start questioning management. I mean, he had mentioned that, when things were growing, other things like monetizing households that weren't paying were not a priority, when they probably should have been. An ad-supported network, you would have thought that this would have been in the works. It's not like no other streaming platform has this model. It's a brand new model. No, it's been out there, and yet Netflix is now only going to look at it. It's going to take a couple of years to ramp up. This all seems kind of surprising.
Well, yes, Netflix is definitely late to the game when it comes to the ad-supported business. Right now, those comments from Reed Hastings make the moves from companies like Peacock, CNBC's sister company, as well as HBO Max, which added an ad-supported version. Even Disney is ahead of Netflix on this. They haven't launched their ad-supported version yet, but they say they will have an ad-supported version of Disney Plus by the end of this year. Netflix is also at a disadvantage, Melissa, in that unlike those other companies, broader media companies that do have ad infrastructure, Netflix just doesn't. So there's this question of whether or not they're going to have to actually buy a company to give them some of those tools that they'll need to be able to quickly ramp up an ad-supported version and get that to market.